Light FM. A little procedural information here. The birds from Comcast are working on the wires out in back of us down the line, and just got a text from our friends down at Musselman saying their phones and their internet are down for the moment, and it's a planned outage because they're doing some work. I'm crossing our fingers that we don't lose our phones and our internet here for at least the next little while, but it's maintenance and it's planned, and we'll take care of it. So if all of a sudden we disappear from our stream for a little while, we know about it. We don't like it, but it'll be better when they get us all back again.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
It's time check in to find out what's going on your money on Wall Street, and we do that with the help from Philip Statler at Statler Financial Services, who's on the phone that I hope is still on this morning. Philip, are you there?
I'm here, man. How's it going?
Oh, thank goodness. When Claudia texted us saying she'd lost her phone, she's only about a hop, skip, and a noodle away from us. I was hoping they hadn't taken us down yet. This kind of scared me for a second. It's good to hear you this morning. We ended up with another barn burner, everything being relative day yesterday. The Dow is now over 51,300, new closing record after going up 229 points yesterday. S&P is up over 7,600. We start the morning at 7609. That was up about 10 points yesterday for a new record. NASDAQ just inched up by 7 points, and the Russell went up by 0.9 of a point, something I've been saying to lead into this thing almost every day. Boy, you can't tell there's a war on, can you?
No, you can't, Dave, at least looking at the numbers, and had that discussion a couple times actually yesterday. So it is interesting to see that these markets continue to hit highs and stay high. A tidbit, I was looking at an article that about oil. You know, oil, people always want to know, why is oil coming down when it should be going up based on still the Strait of Hormuz basically is closed. The article said there's like, and this number just is flabbergasting to me, 1,700 ships with oil on them are sitting out there in the ocean somewhere.
Well,
1,700, Dave.
You got to, at the very least, assume the sea level isn't going down with all that stuff floating in the water.
So
you know,
this guy,
I was going to say, I haven't heard the number of ships that's out there, but they're talking about once they finally do get through the strait, we're looking at 30 to 60 days before any of that oil ends up going into the pipeline to actually get refined and fix our gas issues. So this is going to be a midterm issue at the absolute least.
Yeah, it is. It's going to continue to be an issue, but it is. I found it interesting. The guy laid out 3 points as to why he thought oil prices were coming down. You know, he feels like that there's just unrealistic optimism that this Iran deal is going to be done, and that's going to get everything opened up and moving on. The one that really caught my attention is China. He said that somebody was over there. Which analyst? There's an analyst over there the other week or so, and came back. The J.P. Morgan analyst, and she said that what they saw, their biggest takeaway was that the demand in China has fallen by 9%. That's 1.5 million barrels per day slowdown in their usage. And
they have gone absolutely crazy on electric vehicles over there. But when you start getting down to like a 9% drop in total demand off of their reliance on electrics, that's amazing, isn't it?
It really is. So I found that just to be interesting. The guy said, you know what, there's more reason for it to head towards 50 than there is for it to head towards 150 right now.
Well, when we see what happened to the price of oil overnight, we'll kind of cross our fingers that happened. Economic reports over the last couple of days have been, again, like I said, you can't tell there's a war on. Yesterday afternoon, we got the JOLTS report, and it brought more color into a pretty good labor market. The job openings level was the highest openings level in 2 years. Now, keep in mind, this is April, not May, but still it tees up an interesting May. And then we get the ADP report out this morning, the big payroll service, and they said we had the most jobs added in the private sector last month in 16 months, 122,000 new jobs. I mean, for all the worries we've got about inflation and rising interest rates and bond yields and, profligate federal spending, and they're more worried about the NCAA than they are inflation in Congress. By God, the job market seems to be doing relatively well, doesn't it?
It does. It seems to be just hanging in there, and which is good. That's helping with other key areas of the economy. So we just take that as good news right now.
Absolutely. I mean, it's good news. Don't understand why it's happening, but it's good news either way. And there really aren't right now, anyway, for this week, the red marks that we expected for the week. Now, it's not over yet. It's only Wednesday. Tomorrow we get the first-time unemployment claims, and then on Friday we get that largely fictitious but still iconic federal unemployment report showing our official unemployment rate and the number of jobs added in total in the economy. And they're only expecting 93,000 jobs added in the economy. If ADP is anything close to right, we should be able to overachieve that, I would think.
I would think so too, and because my number is even lower than that. I mean, my expectation is 80,000.
Wow.
Yeah. So yeah, I found that interesting too. Hey, yesterday in your absence, we were talking about Marvel Technology, and it had a super day yesterday. We said it was going to have a good day. It ended up 32% yesterday. And if that wasn't enough, Dave, it's continuing to rise this morning. It's up another 10.5% right now.
All because Jensen Huang said he thought it was a good buy.
Well, that, and NVIDIA invested $2 billion into microtechnology.
Well, so he put his money where his mouth is.
Yeah, exactly. So.
It is true, what I've been reading, that the chip stocks and the AI stocks have been driving this run-up to a large extent. It kind of gets verified by the fact that the S&P and the NASDAQ have, until yesterday anyway, been leaders in the process, and the Dow kind of dragged behind. We're now finally seeing all-time records on the Dow, but the S&P was kind of leading the Dow into record territory weeks ago before this run-up actually happened. Another tidbit, we've got the Morningstar people saying that SpaceX is overvalued, and they haven't even done their IPO yet, but Morningstar says that SpaceX's value is actually less than half what they say its IPO target is going to be. And I got to believe it's probably going to go down after that little blow up with Jeff Bezos' private spaceship last week, too, wouldn't you think?
Yeah, it could very well. I mean, obviously, SpaceX hasn't had that issue in a while. They did have some blow-ups, over their time period of trying to get it up and going. But yeah, I mean, it could have some pressure on it. But it is, I find that interesting that they come out with that indication because I've kind of said that a little bit to some of my clients that are interested in SpaceX, but the people that are going to make money on SpaceX already own it, right? The private equity guys, the guys that get in on the bottom floor. The IPO will be interesting to see how it comes out and how it looks a week after it comes out. That will be the telltale for it.
I was going to say that's the real acid test. What it looks like a week later, the people that, like you say, the people that make money on IPOs are the ones that get the favored treatment for the original offer, and the people that had stock in it when they started out. The rest of us are really doing a crapshoot on a lot of IPOs, aren't we?
We really are. Another little tidbit I want to mention, private equity firms, we talked about, it was about a month or 2 months ago, debt equity firms were having issues with people wanting to take money out. Now it's hitting the normal private equity firms. Bloomberg came out with a report that Blackstone, KKR, Blue Owl Capital, all of those private equity firms are trading down this morning.
Nothing like a warning coming out of one of the big brokerage houses. Last of my tidbit list that I found fascinating, Dollar General, I don't think they reported, but they had they put out a statement yesterday saying that customers are buying less food because driving to the grocery store is too expensive. Yeah, can't afford the food when you get there, and you can't afford the gas to get there. That's not a good combination, is it?
No, definitely not. Definitely not.
By any measure. Talking about the companies that are actually putting out hard numbers this morning, Macy's has been kind of an interesting story because back about a year ago, they were 1 foot out of Chapter 11. All of a sudden, they're kind of back as being a going concern, aren't they?
They are. They really had one of their strongest. They said strongest first quarter growth in 4 years. As we look at their details, they earned 13 cents a share. Now there wasn't anything to compare that to because they weren't sure exactly how that what adjustments were made in that 13 cents a share. But still, they made 13 cents a share. I think the big thing for them was their revenue was up more than expected. Their revenue for the quarter was $4.68 billion. Yeah, so that was some good news for them, as well as their revenue for the year is expected to be better too. Their full year guidance went up as well. So they're trading up about a little over 1% right now.
Which for a retail stock, slamming it, just being up is a good thing for a brick and mortar retailer these days.
It is. And let's look at another retailer, Ulta Beauty Supply. They actually they beat on earnings, they beat on revenue, but there's something in there because they even lifted their full year earnings guidance. So I'm having a hard time really figuring out why, but they were trading down 1% earlier. Let's see where they are now. Now they're down 3.5%.
Oops.
Yeah, not sure what else is in that report that I'm not seeing, but obviously there's something there. And then we got a lot of retail today. Ollie's Bargain Barn, a bargain outlet, reported as well. They did okay for this last quarter. They hiked their full year guidance. They were trading up more than 4% earlier. Well, that's dissipated. Down, they're up now about 0.4%.
That's good. That's good. I kind of see that as being a bellwether. All the off prices that take excess from other stores and resell it. That's a good sign for the retail economy as a whole if the off price stores are keeping their stock and their sales up.
So that's not bad day.
We'll set up the table again. We had a good day yesterday. 2 new records on the Dow and the S&P, and all the major indexes were up at the end of the day. 45 minutes before we open this morning, what are we looking at?
Dave, I'm afraid we are going to give back some gains right now. The Dow is down 0.4%. That's like $205. The S&P 500 is down about a 0.2, a little over 0.2. That's almost $16. NASDAQ's flat right now. The Russell 2000 is down 0.6. That's like $17. So everything's red. On the other side of the coin, we got silver and gold, both in the red. Silver down 1.4, gold's down 0.75%. And like you said, crude oil is heading up this morning 2.6% to $96.25 a barrel right now.
Somebody didn't read that analyst you were quoting earlier, did they?
They didn't, I guess.
Read your papers, people, and bid it down, would you? The overseas markets, Asian rim was kind of mixed with a green tinge to it. The 2 mainland Chinese markets at the close, up about 0.5% on average. Most of the markets were up except for Hong Kong. Over in the European community, they're still a little bit reticent about the price of oil screwing them up. They're pretty much solidly in red ink. Average European index down by about 0.5% halfway through their trading day today. Getting my retirement together and getting a plan where I don't need to worry about this day-by-day junk, that takes some expertise I don't have. How do I find you to take advantage of your eyes, sir?
Then give us a call at 863-382-0037. Love to discuss where they are in their retirement planning process and help them get to where they need to be. That's important. And then catch the Statler Financial Radio Show this weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And you and me back again together tomorrow morning here. Appreciate it, my friend. You have a good day.
All right, babe. Take care.
Thank you. It's 105.7 Light FM and Statler Financial Services, Philip Statler.
Hey, everybody. It's Wednesday. Glad you've been with us this week. Hope you stay tuned tomorrow as we look at what else is happening in the world of economics and the markets. Give us a call, 863-382-0037. Have a great day. Tune in again tomorrow. Bye now.